There's some interesting comments there, both on markets and on politics. We'll talk about both. Our money guy is Doug Flynn from Flynn Zito, who you see on this program all the time. He joins us now. And our political guy, White House columnist for The Hill, is Niall Stanage. They both join us right now. So, all right, guys, let's talk about this a little. Doug, I'll start with you on markets. We've been talking so much about the market getting hit, the stock market. I did think it was notable right there that the president acknowledged, it seemed to me, that the bond market, which is about double the size of the stock market and much more important in many ways to the real economy than the stock market, seemed to play a role in his move today. He said, and I quote, "I was watching the bond market." Then he went on to say, bond market can be tricky. Now it's beautiful. Can you talk about that a little bit and what was going on in the bond market last night and this morning, and maybe what, I don't know, maybe that prompted, sounds like it did prompt the president to make a move today.
It's interesting. I would disagree that the bond market is booming and that it's looking great today. It's actually not looking good at all, and that might have been what prompted it. I mean, the stock market lost 4,500 Dow points in the last 4 days, and maybe we get half of them back today, which is good. But the bond market has sold off precipitously, and it's because it's the worry of that. It's because perhaps some of the foreign governments maybe want to sell some treasuries, and there's also some hedge fund shenanigans going on with some carry trades and things that they kind of got caught on the short side of, so they're covering those trades, and that's whipsawing the bond market. So there's a little bit of delay in the bond market, if you ask me. But rates are too high for Trump to do what he wants. They were actually quite a bit lower a couple of days ago. I think that's where it will settle down to, but it hasn't today.
And not to go into the weeds on all of this, to get to you in a second now, but the fact that the 10-year Treasury note, the interest rate of the 10-year note went to like 4.5%. I know it's maybe a little off that, but to your point, it's still up. It is striking to me that that's when the president moved, not with all the stock market back and forth. I mean, he sat through that, but once the bond market sent this message to me, it was message received, and now it's negotiation time, I guess, right?
We have to renew some Treasury bonds that are coming due, a whole bunch of that, and you don't want to do that at a high point. A lot of what he wants to do needs lower interest rates to do it. You need lower mortgage rates. You need all of that to really happen, and that isn't happening with rates here. They were half a point lower just a couple of days ago. Yeah. So we need to get them back there, and I think that's where ultimately it gets to once things settle down. But we're still in that, is this real kind of scenario? So we'll see whether or not it is or not.
Stock market, meantime, is taking off. You see the Dow on your screen. NASDAQ's up even more than that. NASDAQ's up like 11% right now. So we didn't get it all back now, but we're getting some of it back. There's the three, Dow, NASDAQ, S&P, ripping higher. So just for context, the Dow was at pre-liberation day, like 42 and change, I believe, 42,225. So it's back to 44, okay? That's where we are. Didn't get it all back. We're getting some of it back. How about the politics, Niall? What would you say? To me, I mean, I don't know if it matters who gets credit, but the next move here will come probably from Treasury Secretary Scott Bessent. And it seems like he played a pretty big role in this. And it's interesting because now he gets to negotiate. He kind of resets things. He can negotiate off a 10% base on all these countries on their tariffs, as opposed to whatever that was that the president was holding up in that chart that nobody seemed to think made any sense. And he's got the China negotiation. So it's all China, and everybody else is at 10%. So that seems like a little bit of a better position for Bessent and company to negotiate off of. What do you make of all of it?
Yeah, I think that is true, that it is a better position for the Bessent types of figures in the administration. As we know, Connell, even within this administration that is so dominated by President Trump, there are obviously very different perspectives on this whole topic. And we look at things like this feud that has broken out between Elon Musk and Peter Navarro as evidence of that. But I think the big picture here, Connell, is President Trump will never say he has backed down.
Right.
And so it falls to us to say he has backed down here. Not 100%, it's not a total capitulation, but he has plainly felt the heat from the stock market, from the bond market, as you and Doug were talking about, and he has moved away from the policies that he was pursuing. The argument had been that he would stick with those policies until there was some kind of rebirth of American manufacturing, a process that would obviously take years. The pain, the heat has become too much, and so he's pulling back.
I would agree with you on the manufacturing part, and the president will be asked about that, I'm sure, in the coming days. What happened to bringing all the manufacturing back, and will that still happen? He seemed to suggest that it still could there, but, it seems to me that there's some either-or in all of this. The other part, I'm not sure how much it matters. To me, Doug, this was the only move. It had to happen at some point. I give you an example. So when we used to talk to all the people that would come on, you and others, but like when we talk to economists who say, what's the odds of a recession? And like when Mark Zandi was on the other night, he said 60% by the end of the year. there. And I said, well, what if the president changes course? He says, well, that's where the 40% is. So in other words, if he doesn't change course, we're going into recession. If he does, we might not. And I think that means this was the choice, and he just needed to find a way to do it. And now I think with the China thing, he found that, Doug. So the question is, what's next, right?
Yeah. Well, I think if you said as the base case that all along what he wanted was 10% tariffs, and is a crazy way to get there. You can't ask for 10 and get 10. You got to ask for crazy numbers and you end up at 10. I think that in a roundabout way, if that's where we end up, that's pretty much what he wanted all along. So I don't know if that's ultimately what this was all about. And in the end, if we were overall around 2%, we end up at 10. The government makes more money, and 10% is not enough to change the long-term trajectory of everything that we were doing. So everything goes back to normal, and maybe you get some onshoring and some investments, and overall we end up better off. That's a win. I think everybody can absorb that. I don't know if that's where it's ultimately going to go, and I don't know what his end game here was with China, but honestly, they're in a tough spot right now because, you know, of the way that he put him in a corner here, and the only way they get down to these numbers is if they take off these retaliatory tariffs.
Yeah, China. So they went to 84, and we're at 125. So that's the next thing here, Niall, and that also has politics behind it because the president probably has more political support. Correct me if I'm wrong for that. I mean, there's a lot of, it seems to me, political support for going after China. It was these other numbers, and where he really got in trouble, even with people in his own party, is that the numbers he was using, and that's why I think it's important to reset it at 10 for negotiating purposes, didn't make any sense. But going after China to a lot of people does make political and economic sense. There seems to be a lot of support for it now.
Yeah, I mean, there is certainly, I think, a broad popular perception that China has taken advantage of the United States, not only with tariff regimes, but in relation to things like the theft of intellectual property. Right. And that is a message that has been sent by Democrats and Republicans for many years. Now, of course, the flip side is China is itself an enormously powerful economy. So, you know, it's not like you're intimidating Lesotho or Bangladesh. China has a lot more leverage and a lot more cards to play in this, and I think there are still dangers to it. But if the question, as I understand it, is there more popular support for a battle with China than with broadly based global tariffs, then I think the answer to that is plainly yes. Right,
which is sort of what we've reset, sort of. I know there's 10% across the board, but that's sort of what we've reset ourselves to. And then, Doug, to go back to the point you were making, you say that China's in a tough spot. As Niall brings up, maybe there's some other levers that they could pull, such as selling our debt. There were rumors in the market that might have already been happening today. I don't know if it was, but they own a lot of our debt. There are U.S. companies, Tesla, for example, that wouldn't necessarily be impacted by tariffs, but maybe China cracks down on U.S. companies doing business in their country. So there are other measures available to them, but you think the advantage, broadly speaking, is with us, the advantage U.S.
I think so. And I also think that, like, just asking clients today, you know, how much debt do you think China owns of our treasuries? How much do you think they own? And it's surprising that everyone thinks it's in the trillions, and it's something like 750 billion. Now, that's not nothing, but it isn't trillions. Japan and other countries actually own more of that. So look, Biden printed $6 trillion of money. If we had to eat the 750 billion, of course, we would never do that. But to put it in perspective, this is, they don't have all the hand they think they do with the 750 billion that they're holding. So it isn't as powerful when they had a much bigger percent. Now, they've also diversified away from us. We're only 15% of their exports, where a couple years ago it was 20. So they've reduced reliance on us as well. So there's a little bit of decoupling going on. And so now it's just going to be, you know, back and forth to see how everyone can save face and get this behind us and get back to the business of business, which is what everybody wants to do.
Yeah, and save face is always the term we use with the Chinese culturally, but I think it applies to the president today, and he found the way to do that himself and got to this off ramp. And then, to your point, we'll see what the Chinese do. Those are really good points on the debt. Last question to you, Niall, is more of a political one, because this is not the only thing the president is dealing with. You get the vote coming up, we think still, I believe, on Capitol Hill, on the one big beautiful bill and all of that. So his agenda and whether that can move forward has also been an open question. Where are we on that? Do we know?
Well, we now are in the situation where the rest of his agenda can at least get some oxygen, because what has happened for the past week is that Liberation Day and its consequences have absolutely dominated the conversation. And while the markets were declining up until today, there was a real danger that that would hollow out some of the softer support that the president has among the middle ground people. We know there are people who love him and people who hate him and will never shift, but those market falls were causing real problems. times. Now he can, I think, find some element or some shards of the spotlight to shine on the other parts of his agenda, rather than the question day after day after day being, what are the markets doing and how will Trump react to what the markets are doing?
No, all good points. Thank you, Niall, as always. And if you want more from Doug or from me, you should get yourself checked out. Now, we have this, because today's such a crazy day, we're going to do something special today. And on the NewsNation YouTube channel this evening, once we wrap up our live broadcast, we're going to break everything down. We're going to take questions about what you should be thinking about. Doug is great at this for your long-term investments and your saving for retirement and everything else. So Doug will answer your questions. I might have some questions for Doug myself. So that's right after 6 p.m. Eastern when we wrap up live. QR code's on the screen. You can join us on YouTube at NewsNation. All right, it's 29.